a buy high, sell higher trading setup, you definitely have to hang around for this next presentation. Hi, I'm Philip Teo, your host for Online Trading Summit, and I'm excited to introduce to you Christian Dezon, our presenter for this session. Christian is a stock market trader and educator, also the founder of Trader Development, where he has mentored more than 1,000 students across 10 different countries to help them create and multiply wealth through the Philippines stock market over the past 5 years. He started trading in 2010 when he was still in the corporate world as a pharmaceutical sales representative. He then decided to become a full-time trader in 2014 with only 60,000 pesos in his capital. Fortunately, he was able to create a system that turned that into 1 million pesos in less than 12 months. Now, with these very great achievements and this short introduction, it's my honor to welcome our summit speaker for this session, Christian Dezon. Hey, Christian, welcome to Online Trading Summit.
Hello guys, good morning, good afternoon, and good evening to every one of you, wherever you are watching right now. It's a pleasure to be here. Hello, Philip. Thank you for having me here.
Fantastic. It's a privilege for me to have you on board the summit because you are like one of the most popular trading mentors in the Philippines. And this time round, you're going to share with us how to ride extreme momentum using a consolidation at the highs trading setup strategy. Now, for the benefit of those summit participants who might not know you before this, including myself, can you briefly walk us through on your personal trading journey? How did it all started for you and what inspired you to do what you do right now to become one of Philippines' most popular trading mentors today?
Thank you so much. Oh, wow. The start of my trading journey. Actually, I started in 2010. That was like almost 10 years ago. After graduating from college, I applied for a job actually in the pharmaceutical industry. And during the training, okay, because there's like a 1 month training, right, for the new applicants. So, or for the new employees. So during the training, there's this one guy who became my friend because we were always together during the training. And then he mentioned Robert Kiyosaki. At that time, I had no idea who Robert Kiyosaki was. I had no idea about, what stock market is. And he was like always every single day, he was like telling me about the Rich Dad Poor Dad. I guess a lot of the viewers right now have read the book Rich Dad Poor Dad as well. And then that's the first time that I got brainwashed. I got brainwashed into, I realized that, being, I have to look for other ways because I cannot just, be an employee forever. I have to look for other ways and then turn, create a business or be an investor somehow. And then I opened an account with the little money that I had during the time. And that's the start of my dark ages. Actually, why did I say dark ages? Because actually the first 5 years of my trading life were, really bad. There were a lot of losses. I blew up two trading accounts in the process because I was too high-minded. I was too, I would say, arrogant because, in college, I was too, I think of myself as a very cerebral person. I'm intelligent. I can do this. I read a lot. I study a lot, and but the portfolio performance is not showing all of that. And I blew up two trading accounts in the process, and then that's when it hit me. I started to look at myself. I started to reflect. I reread the secret the Rich Dad Poor Dad again, and then it hit me. So, because the Rich Dad Poor Dad is all about mindset, right? Which is a big part of trading. And I searched for a lot of seminars, personal development seminars. I read a lot of books. I read The Secrets of the Millionaire Mind by T. Harv Eker, one of my indirect mentors as well. And I attended a lot of seminars as well
on
abroad.
trading.
No, actually abroad, because the first 5 years I attended a lot of trading seminars, but it didn't, got me to where I want to be, and that's why I decided to think outside the box, to look for other ways, and after that I became an advocate of personal development. I even up to now I believe that trading is a personal development game, and you can learn about the technicals, about the how-tos in just 2 days, or just by reading a book or attending a 30-day mentoring program. But the personal development side, it's something that's, I would say, lifelong.
I see, I see.
And
So
that's
you
that's
you
mm.
you actually spent 5 years struggling in the trading or in the financial markets itself. So what was the evolution? What do you think were the mistakes and the subsequent evolution that turned you into a profitable trader after that 5 years?
First things first, risk management. Because the first 5 years of my trading life was always going all in, trading these speculative stocks. We call it in the Philippines port liners, or the penny stock. So I was going all in, but I didn't know what I was doing, back then. And when I started to look at risk management first, and do it the right way, that's when it started to change, or transition, or transform.
I see. And when was it that you start to realize that, hey, actually I can become a pretty good and profitable trader?
When I took the leap of faith, actually. So I resigned. I quit my job after working there for 5 years. And way back, I think in 2014 or 2015, I took the leap of faith with 300,000 pesos in debt. Actually, I can't think of anyone who quit and went full time trading with that a lot of debt, But it gave me courage. It burned my bridge, and yeah.
But you
the
wouldn't
rest is
consider
history.
yourself as a proficient trader already, right? By the
Not
time
yet,
you quit your job.
not yet, not yet. But
Okay, so what was the turning point, or if you can remember, what were the key milestones or the key events that help you become a losing trader for the past 5 years to become profitable?
yeah, so actually there were a lot of like key events, but one of the fundamentals, or the very critical things that happened during that time was when I was mentored by someone, not in trading, but in the personal development game. So I met my mentor, my life coach. I consider him my life coach, and as well as my mentor in public speaking. And they taught me about, how to think differently. And yeah, that was it, I
I
think.
see. I see. And how did that help you as a trader in any way?
Yeah, because, one of the things that I've learned in this journey is, if you want to be a professional trader, a proficient trader, or successful trader at that, so you have to have courage.
Mm.
And those mentors helped me to, to do the things that I wouldn't normally do, like, study really well, or accept defeat, not accept defeat, accept mistakes. The
I see.
courage to accept mistakes.
I
That
see.
was, critical for me.
I see, I see. And it was until a certain point in time that you started to mentor people, right? I mean, based on your introduction, you have actually mentored thousands of
Yeah.
students across this region, this part of the world, probably. And how did that transition from an independent full-time trader to becoming a trading mentor? How was that transition like, and what was your motivation for doing that?
Ooh. I think like after I went full time in 2015, and then people I started to like post a lot of things in Facebook, post my performance, even my losses in Facebook, and people started asking. And that's the time that I conducted a lot of free seminars, a lot of free, one-on-one coaching and workshops. And it actually my passion, or my childhood dream back then, was really to teach. And if there's something that I want to teach these traders is, teach them the lessons to not commit the same mistakes that I did during my first 5 years. And that really inspired me. And up to now, that's why I'm here, actually. So they won't suffer the same duration, or the same years that I've suffered. And maybe if they will struggle at first, every beginner struggles, but
In a
then
way,
that learning curve. maybe
Yes.
shorten it to like 6 months or a year. And that is the reason why I'm teaching.
I see. And to shortcut their learning
Yeah.
process so
Yep.
that they don't have to blow up their accounts like how you did previously,
Yeah.
which can be very, very devastating. In fact, I'm actually even very proud that you actually could survive it for 5 years and still hang on to it and to persist. So that's really some kind of achievements that it can really go on to inspire people who have just spent like 1 year, 2 years, didn't make it, and they can really still continue to persevere and find a path ultimately. Wonderful. I'm sure you are now all ready to share your presentation with the summit participants. Now, to the summit participants watching this video right now, I'm sure you are just as eager as me to seek Christian's insights with regards to his trading strategy, workflow, best practices. But before we head into that, I would like to take a moment to thank and introduce you to our summit sponsor.
Hey, I hear there's this new blue chip. It's going to be Moon. You should bid so not to get wrecked.
You're new to this, aren't you?
Yeah.
Just copy what I do. First,
Trade like eToro's top traders. Turn their experience to your advantage by automatically replicating their trading actions. eToro. Try it now.
isn't this your flaw?
Not anymore. I'm copying you.
All right. Maybe like Chinese.
Hello, everyone. I'm sure you're very excited to take your trading to the next level next year. And I will be sharing to you how to ride extreme momentum using consolidation at the highs. Okay. So what you're gonna learn, by the way, my name is Christian Dizon, and what you're gonna learn today is how to spot good opportunities in extreme momentum. You will learn how to qualify and disqualify if the trade is worth the squeeze. How to trade the consolidation at the high setup when it appears without worrying too much about chasing prices. And last but not least, how to effectively execute your trading plan by having the right mindset before, during, or after the trade. But first of all, I would like to thank you guys for being here. Your presence means a lot to me. You know what they say, 80% of success is showing up. And it's really sending a message to me that you guys are very serious traders. And that alone is very inspiring. So I'll do my best to not waste your time and to add value to you guys today. Let me introduce to you guys, by the way, my company, which is Trader Development. And this is our mantra, inspiring change and to transform lives. And so far the thing that we really do is to conduct workshops, events, in-person events, workshop seminars and programs like this one and this one as well. This was in University of the Philippines. And again, actually this one was our biggest event by far, 800 attendees also in the University of the Philippines. But then the pandemic happened and we shifted to online. And these are actually my students in our recently concluded 3-month program. And if we're not conducting workshops, we usually read to the kids. Okay, so this is our movement or our charity. So it's called One Help, like what I'm wearing right now. So it was actually built on a simple premise that there is no such thing as One Help, and all of us can do one help every day, and that's 365 helps in 1 year. So these are actually my students. And we go to schools, we feed the kids, we also entertain them, and we give them toys. And because basically our advocacy is to, our advocacy usually directs to education. We really, really believe in education, that it can solve all problems, not just financial problems, or it can also solve love problems. At the same time, problems about politics, problems about health, problems about even global warming. If people can see eye to eye and be intelligent about making decisions, and that's why education is very important to me and to my team and to my students. But most of the time, actually 80 to 85% of the time, this is where I am. In front of my computer, just trading. Actually, so this is my trading station. And yeah, that's me. So I'm a full-time trader. And as Philip mentioned a while ago, I'm 10 years in the trading in the Philippine stock market. And in the process, I blew up 2 trading accounts. And right now, I'm happy to say that I'm consistently earning 300% year-to-date performance in the past 5 years. So basically, who am I as a trader? I'm a momentum and swing trader who normally holds a position on an average of 1 to 3 trading days. I usually trade breakouts and rebounds or bounce plays. And my average position size is 25% of my portfolio. I usually hold 4 stocks at a time at the minimum. And I believe that trading is a personal development game. So my trading journey so far, there were a lot of, good days, better days. And this is what I want you guys to look at. This is part of trading. These are the red days. This is 1.2 million in one day. These are all 1 day performances or red days. So I want you guys to just for a second absorb this one, and especially for the beginners out there, to look at this one and accept the fact that if you want to be a better trader someday, you have to accept losses. And actually, that's one of the reasons why I'm here. I want to teach you guys some of the lessons, and more so the mistakes that I did, so you won't commit it as well. So let's start. Okay, I'm sure you guys are excited. I'm excited as well. So just a couple of house rules to make this session very productive for every one of us. Don't just believe anything I say. Okay, take it everything with a grain of salt and do your homework. Okay, after this session, I'm sure you guys are going to your charts and look at the consolidation at the highs, or the setup that I will be teaching you guys today. Number 2, I'll be needing your 100% attention. So I'm requesting you guys to turn off your phones or just put it into silent mode. Number 3, and this is very important, take down notes as much as you can, because I don't want you guys to miss the important details. Okay, so if you are ready, I am ready as well. So what this setup is all about. So consolidation at the highs, you put that in your notes, consolidation at the high setup. This is a go-to setup, a trade setup that you can rely on, especially in a crucial situation. Okay, so for example, in basketball, there are, famous go-to guys like Steph Curry or Michael Jordan, who, they are the go-to guys to take the buzzer beater shot. So think of this setup as like that. A number 2, this is a plug and play setup. Okay, what does that mean? You can use it right away, as early as tomorrow, or without any modification. Okay, and number 3, this is a I'll be sharing with you guys a foolproof recipe, and easy to follow and understand. So here's the warning. Here's my warning for you guys. This setup will only work if you will follow it 100%. Okay, if you will follow the step-by-step and the instructions that I will be sharing to you guys. Okay, so you will learn the complete recipe, the how to spot this setup, how to qualify, and more importantly, how to disqualify this setup. Okay, number 2, you will also know how to trade it. The entry, the exit, and more importantly again, the stop loss levels or the stop loss strategy. And number 3 is I will share you guys the mindset that you need to have, okay, before, during, and after the trade, while trading the consolidation at the highs setup. Okay, so I will also be sharing with you guys these trade walkthroughs. 4 trades, we will be dissecting them, and I will be showing you guys how I traded them. Okay, and yeah, let's dig deeper. So I want to share with you guys the 3 stages of a continuation pattern, because consolidation at the highs is basically just a continuation pattern. just like this one, okay, the chart in front of you. So the first stage is the prior move, which is which looks like this, and then there's the consolidation, and followed by a continuation. So this is the basic stages of continuation pattern. So how about consolidation at the high setup? Okay, what does a prior move look like in a consolidation at the high setup? So we are looking for a strong breakout. First of all, from a long consolidation. By the way, guys, I want you, you can screenshot this and put it in your virtual notes or whatever. But we are looking for a strong breakout from a long consolidation. Ideally, 3-month consolidation, 6 or 12 months. Number 2, we are looking for a strong rally in the next few days after that strong breakout. Usually characterized by a successive green candles, creating higher highs and higher lows every single day. Number 3, we are also looking for the RSI to be above 70. So we're going to be using an indicator here, which is RSI. So we're using the normal 14-day RSI for this setup. So the higher the RSI, the better, you know, because the setup or the consolidation needs a room, okay, a wiggle room for the retracement. Next, number 4 is we are looking for a resistance hit, or we want to wait for the momentum to stop, or at least to stall. Okay, imagine this setup as like, you know, a person running, and then he stalls, he runs, you know, you sometimes, you know, you jog in place. So it's still the person still, you know, running, but you know, that's the consolidation part. Okay, so we are looking for a very strong rally, and we want to wait for it to consolidate. So let's take an example here. So this is the daily chart of HVN. So what you can see here is a consolidation, and there's a breakout. That's a strong breakout because that breakout, this candle actually registered a 49.1% during the day. So that's a strong breakout. Okay, and on the weekly chart, that candle, this one, okay, so it's actually a breakout from an 18-month or 1.5 year resistance. Okay, so far so good. The number 1 criteria is what we're looking for is a strong breakout from a long consolidation. So check. Now what happened in the next few days? So the breakout was here. Okay, the breakout was here. And look at what happened in the next few days. There's a strong rally in the next few days. Successive green candles creating higher highs and higher lows every single day. Check again. And then look at RSI. So RSI right now, so imagine that we are here, okay, at this candle. So RSI right now registered at 99.11. Okay, so it's above 70. Check again. And yeah, there's the resistance hit. Okay, so the momentum actually stopped here, and then the price stalled. Okay. So the 4 parameters, 1, strong breakout, strong rally in the next few days, RSI 70, and then the resistance hit are actually met. Okay, so that's the prior move. Okay, to summarize the prior move, so we're looking for strong breakout, strong rally in the next few days, RSI 70, and then there's the resistance hit. Okay, next, let's talk about the consolidation, the setup. Okay, the consolidation. So we are looking for a tight and quick consolidation. Number 1, very important. The support of the consolidation should be above 23.6 Fibonacci retracement support zone. So we're going to be adding an additional indicator here, which is the Fibonacci retracement. Okay, and then we are looking for a small box height. Okay, or a small consolidation, which is actually characterized by the 1 to 3 candle box height composition. Later, I will explain it. Okay, I will show you guys an illustration of this. And number 3, we are looking for a short box length. So this pertains to the duration of the consolidation. So this is the price range, small box height, price range of the consolidation. Now this one is the length, which is the duration of the consolidation. So we're typically, the consolidation of the high setup should be 1 to 10 days only of consolidation. And then price, while this consolidation is happening, price should be above RSI 70. Okay? So these two right here, number 2 and number 3, are actually the characteristic of a tight consolidation. So we're not just looking for a normal or a regular consolidation. We're looking for a tight. So please put that or highlight that in your notes. Tight and quick consolidation. So what does that look? So like this one, so momentum, this is a continuation of the chart that I showed you guys a while ago. So momentum stopped here, and then it's now consolidating for 3 days. So this is day 1, this is day 2, and this is day 3. So price is consolidating. So let's look at the parameters. Number 1, is it above 23.6 Fibonacci? Yes, definitely. So I plotted the Fibonacci here. The 100, if as you can see, the 100% Fibonacci is here, and then the 0 is here, and there's that 23.6, the blue dotted line. Okay. So price is actually sitting. So the lowest price in that consolidation is actually sitting at 23.6 Fibonacci support. So number 1 parameter, check. How about number 2? Is it a small box? Okay, so we're looking at the height of the box. Okay, number 2 is the height of the box. So is it a small box? Yes. So this is actually a 1 candle box, okay, or 1 candle composition box. What does that mean? If you will look at the height of this square, it's actually just this candle. This is what I mean by 1 candle consolidation. Okay? And how about number 3? Is it a short box? Okay, so we're looking at the length of the box. So is it below 10 days? Yes, it's actually just 3 days. Or this is the 3rd day, And number 4, is it above? Is the consolidation, everything here, is it happening above RSI 70? Yes. Okay. So a while ago, during this candle, the RSI was 99. It registered 99.1. Right now, RSI is sitting at 95.6. I mentioned in the previous slide that the higher the RSI for this setup, the better. Okay? So don't be afraid about RSI. Okay? If it's above 70. This is for this setup. Okay? So let's look at this one. So this is the difference, okay, between a small box and a tall box. So this one is a small box. Again, the height of this box or of this consolidation is just this candle, okay, 1 candle box composition. If you will take a look at this box, so this one is a tall box. So momentum actually stopped here. There's the resistance here, and then look at what happened in the next few days. Okay, so it dropped in the next few days, so creating lower lows and lower highs in the candles. Okay, so this one is actually, we're gonna count the candles right now. So 1, 2, 3, 4, and 5. This is a 5 candle box composition. So this is a very tall one. Okay, we are not looking for a tall box. We are just looking for a small box like this one. Because consolidation at the high setup is just a momentary pause. Please write that in your notes. Momentary pause. The price is not really consolidating. It's just pausing for a few days before it continues. Before it continues the prior rally or the strong rally before it consolidated. Okay. So how about the length of the consolidation or the length of the box? So this one right here on the left side, what you can see in the left side is the short box, an illustration of the short box. So this is just a three candle short box, three candle box. Now on the right side, this one is a long box. That's too many candles. Okay, so if we will count from here up to here, maybe more than 20 candles. So this stock is actually consolidating for 20 days already or more. Okay, we are not looking for a long consolidation. Again, I want to stress that out. We are just looking for a short consolidation. Even if the consolidation happens above RSI 70 or above 23.6 Fibonacci, we want to disqualify these types of consolidation because this is not a momentary pause. This is a normal. This is your classic or your normal consolidation. Okay? We're looking for this, just a short or quick consolidation. Okay, so just to recap, for the consolidation part, for the stage 2 or the phase 2, we're looking for something that's a stock that is above 23.6 Fibonacci with small box height and short box length. And of course, it shall consolidate above RSI 70. So look for a tight and quick consolidation. Okay. Number 3, this is the juicy part, okay? The profit-taking part, where there should the continuation, okay? There should be a strong breakout from the tight consolidation. That's number 1. And number 2 parameter is there should be a strong rally after the breakout. Again, we want to see successive green candles creating higher highs and higher low every day. Okay, at least in the next 3 days. Okay, so a strong rally shall occur after the breakout. So let's take a look at the chart. So this was the breakout a while ago. This was the consolidation a while ago. So it consolidated for 3 days. So this day 1, day 2, and day 3. And on the 4th day, there was a strong breakout, followed by a strong rally in the next few days. So we are looking for like this one, for something that looks like this. Okay. So just to recap, these are the 3 stages of a continuation pattern and for consolidation at the high setup. So I want you guys to screenshot this one because this is something that we want to look for. Okay. So a strong rally in the prior move, like this one, successive green candles, a tight consolidation. I want to stress that again, a tight consolidation. If it's not tight, disqualify it right away. And then a strong breakout continuation. Okay, so let's disqualify. Let's disqualify some. I will show you guys some case studies to disqualify some patterns that happened in the PSE actually. So this is actually ANI. The stock code is ANI. So we have a strong rally here. Okay, which is good, strong rally. But is it above 23.6 Fibonacci? Yes. Okay, so the Fibonacci base is here, and then we plotted the 0% here, and there's the 23.6% Fibonacci. Is it above it? Yes. Is it a small box? No, it's actually a big box. So again, we are looking for a 1 to 3 candle composition. Now look at the composition of this box, the candle composition of this box. We want to count from the top to the bottom. So this is 1 candle, 2, 3, 4, 5, 6, 7, and 8. So this is actually not a small box. This is a big box already. Next, we are looking for a short box, but this one right here is actually a long box. Okay, so again, for consolidation at the highs, we have an expiration date of 10 days. Okay, so this stock right here is already consolidating more than 10 days. So we want to disqualify that. And look at RSI 70. It's, if you look at RSI, it's actually at 68.70. Disqualify this types of pattern. Or so if even if the even if the consolidation is above 23.6, we want to be strict with this pattern. Okay. How about this one? Case number 2, PRMX. PRMX, the stock code is PRMX. So is it above 23.6 Fibonacci? So the Fibonacci base is here, the top is here. Okay, so is it above 23.6 Fibonacci? Yes, it's actually sitting right at the support. Now, is it a short box? No. This one is actually a tall box. Why? If you will look at this candle right here, okay, so this is not actually a small candle. Okay, a volatility, this is a very volatile candle. Volatility volatility is actually characterized by long candles, whether green or red, right? So we want to disqualify. We are not looking for these types of candles. So that's a tall box right away. And then we are looking for a short box. How about the duration? Okay, so the stock is consolidating for we're going to count right now, 1, 2, 3, 4, 5 days. So it's consolidating for 5 days. Now, yeah, that's a check. And then how about the RSI? Is it above 70? No, it's actually at 66.16. So this is disqualified already. Okay, how about this one? Case number 3, stock code DHI. So is it above 23.6 Fibonacci? No, it's below. So look at this candle right here. Okay, we want to be strict on this one as well. Now, is it a short box? No, this one is actually a tall box from the top to the bottom of the box. Okay, so this one right here, is a signal that, there's volatility or that the sellers actually took over during this time. Okay, so how about the duration? So is it a check for the duration? Is it a short box? Yes. Let's count. If it's less than 10 days, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, that's true. Now, how about RSI? Is it above 70? Yes. RSI is sitting at 72.6. But unfortunately, we have to disqualify this again. We want to be strict. Okay? So how to trade this setup? Number 1, I will show you guys the entry strategies for this one. Very simple. You can buy on box breakout. You can buy inside the box because relatively that's a small box, right? And buy on box support. Number 2, I will teach you guys as well the stop loss strategy for this one, which is, sell below box top. You can also sell below box bottom, or you can, again, cut loss on time stop. Okay, we don't want to wait. We have an expiration date of 10 days. Number 3 is the profit-taking strategy. If the trade is a win, okay, you can sell at strong resistance or you can sell on momentum target price. Now, this one is very important. I will teach you guys how to compute for the momentum target price later. Okay, let's go. Entry strategies. Okay, for this one, again, you can buy on box breakout, like, for example, so this one is a good setup as well. Okay, the stock consolidated for 3 days, and then when it breaks out from that box, you can buy on box breakout, whether intraday or end of day. Okay, it doesn't matter. Okay, now number 2, you can also buy inside the box, like here, during this consolidation, day 1, day 2, day 3, or even here. And of course, you can buy on box support, like at this level. So these are the buying strategies for this setup. Okay, how about the stop loss strategy? So for example, you were able to buy during the breakout, but then on the next day, life happened. Life happened the next day. Okay, so sell right away. Okay, so for example, this is a red candle. Okay, you have to sell below box top because that's already not a good signal. We are looking for this is a continuation pattern, so we're looking for a follow through. This is, sorry, so this is not a follow through. This is not a follow through. So the price went back to the inside the box and you just have to sell. Okay. Number 2 scenario. What if you were able to buy at support? Okay, on box support or anywhere inside the box. Where is your cut loss or where's your stop loss protection program? Here, you can sell below the box bottom. Okay, to protect your capital. How about the time stop? Okay, what does a time stop look like for this setup? So, for example, you were able to buy on box support. It hasn't break out yet. So, yeah, buy on box support or buy inside the box. Yeah, for example, you were able to buy here. What if it consolidated for 100 years or 1 year, or in this case, at least more than 10 days? Okay, you have to sell on time stop. What's your entry? You can sell whenever it breaks out again. Sorry. You can buy whenever it breaks out again. But right now, we don't want to wait during a consolidation. Okay? So, because what we're expecting, again, the core premise of this setup is it's a momentary pause. This is not a momentary pause because it's consolidated for more than 10 days now. Okay? So that's why we want to be strict following these rules. Okay? Now, let's take a look at this case study. So, this one is VUL. Okay, stock code VUL. It's above 23.6 Fibonacci. That's a small box. Yeah, look at that. That's one candle box composition. The height of the box is actually just this candle. Is it a short box? Yes, it's consolidating. Less than 10 days. And is it above RSI 70? So RSI is at 76, sitting at 76.12. Okay? Look at what happened the next day. Boom! So let me show you guys what happened the next day. It actually, intraday, it actually tried to break out. But then sellers entered here. And then look at what happened to the price during that day. It went below the box top and went below the box bottom. So you can, if you bought on breakout, intraday, you have to cut loss right away without mercy, without hesitation, without thinking twice. Okay, you just have to cut loss here or even here, because I want you guys to avoid scenarios like this. Let's say you decided not to honor your stop loss plan or your stop loss strategy here during this day. Look at what happened to the price in the next few days. Boom. Catastrophe. So this setup, guys, is a very, I would say, fragile. Okay, this is a very fragile setup, and it requires you to act fast and to decide fast. Because come to think of it, this consolidation right here is not a strong one, because this is just a small consolidation. This is not a 3-month consolidation or 6-month consolidation. This is just 10 days consolidation, guys, or even less. So for it to act as support, its ability to act as a strong support is very weak. That's why we want to act fast during times like this, when the market goes against our bias. Okay? So I want to stress that out. Let's look at another example. Now, this one is the stock code of this one is POPI. Okay, and is it above 23.6 Fibonacci? Yes. Is it a small box? Yes. Okay. So again, we have a one candle box composition. Okay, so if you will look at the height of this box, it's just the height of the candle here, right? So is it a short box? Yeah. 1, 2, 3, 4, 5, 6, 7. Just consolidating for 7 days. RSI, is the RSI above 70? Yes, 75.51. Now look at what happened the next day. Same thing to the previous stock. Okay, so the price actually tried to break out intraday, but then sellers went in, and then it actually ended with a very, very long red candle, or very bearish candle, right? So you can, honor stop loss plan here or here. So same thing. Now look what happened the next day. Okay, no turning back. That's why I want to stress again, guys, that you have to follow or honor your stop loss plan. Okay, if you want to stay in this game in the next 5, 10, or 20 years. Now let's have some case studies. So these were my real trades. I want you guys to I want to quickly walk through you guys with these trades. Okay, so stock code. What's the stock code for this one? SMC. It was a buy on support, sell at strong resistance. Okay, 12 days hold with 18.94% gain. Okay, for the 12 days. So what did it look like? Boom. So I actually bought on support here or inside the box. Yeah, okay, so if you will look at this one, there's a strong rally and then it stalled. Okay, or it rested. Okay, for a while, less than 10 days, tight box composition. Okay, and then there's the continuation. So this is a sell. One of the selling strategies, sell at strong resistance. So there's a resistance here, which is actually the lower high of the during this time, and then boom, it sold here. So that was an 18.94% gain in just 12 days. Next case study. This is 2GO. Okay, I bought on breakout end of day, and I sold at strong resistance again. So I held it for 8 days long with 26.29% gain for the entire trade. So yeah, so this one, there's a strong rally again, followed by a quick and tight consolidation. I want you guys to notice the small consolidation there. And then there's the breakout with the follow through. I actually held it during this day, but then when it was going down during this candle, I sold here, around here. Okay, to honor this strong resistance because it acted. Okay, so same setup, very simple setup actually. So that was a 26.29% gain in just 8 days. Next, this HVN. Okay, so the stock code was HVN. I bought on breakout and I sold on momentum target price. Only 2 trading days hold, okay, with 64% gain. 2 trading days with 64% gain. Let me show you guys the momentum, how to compute for the momentum target price. Okay, so again, there was a strong breakout from the long consolidation, okay, followed by a strong rally in the next few days. And I waited for this stock to consolidate. So the momentum stopped here. It consolidated for 3 days. Okay, RSI was above 70. And this is what I did. Okay, so I measured the momentum first. Okay, so from the previous breakout point, which was 26 pesos, okay, to the current breakout point. So imagine, guys, that we are here. Okay, we are here. And then I measured the momentum, 109 minus 26. That's 83. And then, here's what you're going to do. You want to add that momentum to get the target price. Okay? Compute for the momentum target price. So the formula is actually you add the measured momentum to the current breakout point, which is here. Okay? So the target price for this one is 193. Okay? So again, look at this. It hasn't broken out yet. And yeah, this is what I did. Basically, I bought on breakout and there was a follow through on the next 2 days. Look at that. TP was hit. Okay, and it was actually respected in the next few days because the price went down again. So that's a 64% gain in just 2 trading days with consolidation at the high setup. Next, same stock. Okay, HBN. So for this one, this is a buy on support, sell on momentum target price. So same sell strategy. 5 days hold, 117.92% gain in just 5 days. Let's take a look at this one. So this is actually on the weekly chart. Okay, so that's the good thing about consolidation at the highs. Regardless of what time frame you're using, so you can use 5-minute or intraday time frame or hourly time frame or even the weekly time frame, it will still work. Okay, so I measured the momentum. Okay, current breakout, which is actually here, 195, less the previous breakout, which is actually here, 23. Okay, so the momentum is actually 172. Okay, and then I added that here. So 195 plus 72 to get the target price of 367. And then I bought inside the box and sold at 360. Okay, so again, it respected the target price, the momentum target price. Okay, so yeah, so that's 117% gain in just 5 days trading hold. Okay, so I want to give you guys some tips on how to trade this effectively. Okay, number one is this setup usually occurs on small caps, at least here in the Philippines. But some of my students were trading global markets, CFDs, forex, and cryptocurrency, or even equities in the US. They're also using this setup, and you can you can find this setup in small cap stocks or assets. So look for highly volatile and speculative stocks. Okay, but you don't need to read the news, okay, or read disclosures or what, just the charts and you. Okay, number two, my recommended allocation for this one is at least 25% of your portfolio. Sometimes I would go for 50% of my portfolio because this is one of my bread and butter setups. Okay, and yeah, number three is you have to cut your losses without hesitation, guys. When the market goes against your bias, okay? That's the number one role or thing that you need to do here in this setup. Cut loss without mercy. Number four, tip for you is do your homework. Okay? You have to backtest this. I'm sure a lot of you guys will try to look for this one maybe tonight or even tomorrow. So yeah, do your homework, backtest it, at least 50 or 100 charts, 100 successful charts of this setup, 100 unsuccessful charts of this setup, so that you will be be familiarized with this one. And you can also battle test. So what does battle test mean? You can do virtual trades, with a demo account. A lot of brokers or a lot of I think TradingView is a good platform for virtual trading, okay, or for paper trading, okay, so that you will trade it on the day, okay, or as it appears or as it occurs. Now you can also try to trade it with small allocation of your portfolio, like 5% or 10%, or even, and then move up gradually, okay, with your allocation, so that you will be more proficient or get better, okay, as time goes by. And last but not the least, I want to emphasize that you just have to practice, okay, because if there's one thing that I learned in my trading journey so far about this one is confidence comes from repetition. And why did I say that? Because a lot of my students, they are having a hard time or they're struggling with this setup because it's a buy high, sell higher setup. I understand that. You're trading above RSI 70. Sometimes it's 80, sometimes it's 90, but you're still buying. A lot of people, they're selling already. But this setup works only above at that zone, above RSI 70. So, you want to build confidence. You want to have that courage. But you cannot, of course, you cannot read about confidence. You have to execute. You have to apply the things that you've learned here and practice it to gain that. Okay? So, yeah, I think we're done. Thank you guys for participating. Thank you guys for listening. If you want to, so I have a gift for you guys. So, if you've enjoyed my trade walkthroughs a while ago, our case studies, you can download this one. This is 100% free. You can get your free copy. This is the Kidlat Chronicles. Actually, this is a trade walkthrough of my real momentum trades with actual studies and trading rules. So I put there a lot of trading notes. Okay, my personal trading notes. You can go to bit.ly/momentum chronicles. Okay, you can screenshot this one as well. And if you want, let's connect. If you have questions about the setup, okay, what I just discussed, you can go to this link, link3/trader dev. Okay, you can screenshot this one. And if you want to learn more, okay, on the go. If you want to learn more on the go, you can visit our site. Okay, there's a lot of videos on demand here, very, very affordable that you can watch anytime and anywhere with any device. So we're teaching, or the mentors here were my former students, friends, and people that I admire in the Philippines. So you can learn about trading, business, and self-mastery. Unfortunately, actually, so this is what it looks like. So you can go to tradeflix.teachable.com. This is what it looks like. Okay, you can choose your course there. And there are free courses as well. Okay, like this one, how to break bad habits. So this is one of the this is actually Robert, one of the coaches in trader development. Okay, so yeah, this is a free module to help you guys. Okay, break bad habits and create good ones. But unfortunately, there's a small issue about this, about our platform. Most of or should I say, all of the courses here are conducted in the Philippine language or Filipino language. So yeah, but it's actually a good thing, that Philip has mentioned a while ago that you need to conduct more videos or more content in English so that you can reach more. And that's a realization for me today. And we will soon, or very, very soon, we will be doing a lot of or launching a lot of courses in English. But for now, these are for my Filipino Filipino students or viewers. So again, thank you guys for watching, and good luck and have fun, and may the odds be ever in your favor. See you on the other side. Thank you.
Hey, Christian, that was a really insightful and very detailed presentation on your specific trading strategy. And I'm sure the Summit participants now have a better understanding of how to use this momentum trading strategy to trade the markets. Now, to help the participants clarify some of those points that you brought out earlier on, shall we head into the Q&A segment right now?
Let's go. Let's do it.
Fantastic. All right, so I'm going back to the very start of your presentation. You shared about the kind of specific trading setup, which is the first breakout. And from the examples that you share with me, it seems like those stocks that you're looking at usually are very illiquid stocks at the initial stage of the first breakout. So on that front, can you share with us a little bit more? How do you go around filtering the ideal stocks to even look at, to potentially look for such kind of breakouts and for these kind of trading setups?
Yeah, that's a very good question. And you're right. At first, if the stock, for example, there's an illiquid stock or highly speculative stock and just broke out from its long, sometimes 1 year or 2 years resistance, there's no liquidity yet. And that is why I don't suggest you guys go in during those times. Okay, that's why we wait. Remember, the stock already went up. Sometimes it's 100% or 300%. The stock that was highlighted in this one was HBN. It already went up 350 or 360% before I went in. Okay, for that trade. And because there's what I want to share is, or what I want to for the viewers to realize is, there's always a pause most of the time. Okay, if there's no pause, then it's disqualified. But if the market gives us another chance to enter, then might as well take it. But yeah, liquidity is always an issue if for the initial or the prior move, okay, for the initial breakout. So I don't suggest, me myself, I'm not trading during those times as well, because liquidity is important. It's the ease of going in and going out. Sometimes we can go in, but it's hard to go out of the trade. And yeah, thank you for bringing that up, Philip.
I see. So if that's the case, if let's say we just use the Philippine market as example, how many stocks are there in the Philippines market right now?
Active around, let's say, 200, 250.
So out of 250, how do you actually manage your workflow in such a way that you actually have a list of these stocks to monitor? I suppose that you will firstly have a list of stocks that are in the consolidation stage and are those illiquid stocks, right? And then what happens? Do you actually just simply wait every day you go in and take a look, or do you actually set some alerts to tell you that the first breakout has happened from this illiquid stock? How do you actually arrive at that point where the first breakout happens and you are alerted to this potential opportunity that might be coming up?
Oh, actually, it's, there's the good thing about the technology that we have right now, trading with, there's a lot of screeners out there. So for the participants, they can just screen the stocks in their local bourse or in their local market to look for RSI 70.
Okay.
RSI 70 and filter those stocks, and then just, they can browse it manually there.
I see. So which means that you don't even realize that the first breakout had happened, right? You only simply filter for the 70%, and by the time you have those lists of stocks that is above the 70, the first breakout would already have happened.
Yes, definitely. And hopefully in the filtered stocks for the RSI 70, there's at least one or two that's consolidating at the highs.
Okay. Does that mean that actually such kind of opportunities doesn't come by often, and it is really important to actually every day to monitor for such situations so that you don't miss out on any of such trade that's happening?
Yeah, that's true. It doesn't. On the daily time frame, yes, I would agree that it's not that often. But if you are trading on the hourly chart or even the minute chart, there's always consolidation at the highs. Especially for gappers, for gap ups, gap up opens, or even for just the 3-minute or 5-minute chart will do.
Oh, you mean
breakouts?
You mean it's also quite practical to look at intraday minute charts? On such kind of trading setups.
Yeah.
Okay. Now, I want to ask you a question with regards to the drawing of the box itself, because it seems like when the box is starting to form, at a certain point, you don't actually get into the trade yet, regardless whether it's buying inside the box or buying after the breakout. So how many candles do you minimally require to actually to put that first box there to even consider getting in on that first inside the box trade?
Wow, that's a very, very good question. And I think it will really help the viewers. Yeah, actually, at least two candles of consolidation. There's no higher high. It hasn't broken out from the recent high. So at least two candles here you can draw. And then if it goes lower, just trail your box, because you haven't entered yet, right? Okay, you're still looking at the box. So what will it do? So you can trail it. You can, what do I mean by trailing? You can redraw it if it makes a new low inside the box, because the ideal entry point for this one is actually buy on breakout. So buy on breakout, either intraday or end of day, buy on breakout. But for those of the viewers who are more comfortable buying on support, I think 2 candles, will do for
So which means that minimally the third consolidation candle has to happen before you get into the buy in the box trade, right?
Yes. But
And
sometimes there are like one candle consolidation at the highs. That's the time that you have to have like Jedi reflexes to enter on breakout right away. Okay, so that's just the momentary pause for those kinds of scenario. Just one candle. Okay,
I
that's why
see.
you have to like be on the lookout or be vigilant always.
I see. So, do you personally have a general preference of whether to buy inside the box or to buy on the breakout itself?
Yeah, I prefer buying on breakout.
Okay,
Yeah.
okay. And when you buy on the breakout, do you also have a preference of buying based on the close of that day or based on, let's say, intraday, the breakout itself? Because what I realize is that for such kind of strategy, when you buy on the intraday breakout compared to waiting for the price to close at the end of the day and getting in the next morning, the outcome could be vastly different because of the amount that it could have moved during the intraday versus the end of the day itself. In fact, what could be a winning trade could also be a losing trade if you just choose between the intraday and the end of day.
Yeah, that's true. And but personally, I would say intraday. I prefer entering intraday rather than waiting for EOD because again, the core premise of this setup is it's just a momentary pause and the trend can continue right away. You don't know if it's just 1 day or 2 days or 3 days consolidation. That's why whenever the trigger happens, whenever the price breaks out from resistance, I would just enter. And then there's always don't forget that there's the cut loss protection. Okay, you cut loss protection program. That's what I call it. Okay, but you can just set your stop loss if the price goes back below the backstop or below the previous resistance.
I see. So if let's say for example, if I decided to actually enter on the intraday breakout, does that mean that my stop loss and my profit taking should also be based on the intraday as well? So do you actually suggest like if you enter on intraday, you can look at getting out based on end of day price, or if you let's say you get in during the end of day breakout, you can look at stopping your loss during the intraday move inside the box? Do you actually suggest mixing them both or just stick to one? If you do intraday in, then make sure your exit is also based on intraday, or if you do do based on end of day closing price in, then it should be also be based on closing price out. What is your thoughts on that?
That's a very good question. I encounter a lot of these questions always, but my clear answer is I don't want to give you guys a rule of thumb for this one because for me it's always 50-50. Sometimes intraday works, sometimes EOD works, but here's the message I want to give to the viewers. Sell only when there's a sell signal or when it hits a strong resistance or it hits the momentum TP, sell right away. Because again, this is a very fragile or a stock that is on extreme momentum. Okay, if you do not execute this the right way, you will lose a lot. Okay, and it has happened to me so many times in the past.
Yeah, so on that front, can you share with us an example that you actually had a losing trade based on this strategy, and what was the circumstances and the situation, and how bad was that loss like?
Okay, so actually there in the example a while ago. Okay, so if I just want to share this quickly because there was we can draw a lot of insights from this trade. So if we will take a look at this trade, so this was a successful trade actually, but it was actually a third entry. Okay, so this is to go. Okay, the stock code is to go, and what I mentioned a while ago during the presentation was I bought here on breakout. So there's a consolidation at the highs, and then I actually plotted the box for this one at the candle's body, not at the wicks. Okay, so I bought here and then I sold there. But I want you guys to take a look at these two candles because I also bought there.
So you got in during intraday, I suppose.
Yeah, I got in the day, and then price went back inside the box, and then
You got out.
I got out. and then the next day it consolidated. I was hoping that it goes down some more because I thought that the setup was already invalidated here, but no, it again consolidated for another day. And look at this one. So I again bought on breakout here. Yeah, intraday again. And then price went back. Okay, and then sold there at a loss. Okay, for this one around 4%, this one around 2% loss. And then this is where I decide. This is when I decided to you know what? I'll just wait for end of day. Okay, so
Okay, so that's where the flexibility comes in actually.
yes, I just wait for end of day, and then it happened here, and then thankfully it went up. Or
I
there's
see,
no
I
follow
see.
through after the breakout.
I see. All right, great. So you stay on this chart. I have a follow-up question. So after you decided to actually enter based on end of day price, right? So there is also this possibility because a lot of time we see breakouts. By the end of the day, it could have run up a lot. So do you actually have a certain idea if it run up by how much? I'm not going to chase it anymore. In this case, it was actually good because it just closed slightly higher above the breakout box. Yeah, because if it like close another maybe like say another 50 cents or $1 higher than the box, then is it still worthwhile to get in? Because considering your stop loss will be somewhere when it goes back into the box itself, which could be a very far distance away. So how do you actually manage that kind of situation?
Okay, so that's a very, very good question. And there's this concept that I discovered actually or invented, which is the optimal I call it optimal position size, but the core concept of this, I'm sure a lot of mentors are also teaching this one. They have maybe other term for this, but I realized that, there are times that the breakout or the closing candle for the stock is already too high, and but the setup is still valid. Okay, it just closed higher, and because the stop loss strategy is here, right? Okay, but if it goes back below the box, so what if it breaks or it closes at with 20% gain at the day for the stock, or even 30%? What I suggest is as it goes farther or higher, okay, you have to lower down your position size.
Okay. So you still keep your stop loss inside the box.
Yes.
But instead of going in 25%, you go in with 10%, something like that.
Yes. Yes, very good. So if you do that, the value can be the same, but the percentage can be different.
Yes. And the number of shares you buy will drop compared to if the distance was closer.
Yes.
Okay. So which means that you assume that the move is still going to materialize, but in order to factor in the large moves that has already happened, you size it smaller so that even if it hit your stop loss inside the box, you will still lose the same amount as what you have planned initially.
Yes.
Okay. Good point on that. So, okay, you addressed some of those very. I mean, the question was really detailed, and I'm really thankful that you actually addressed them because I'm very sure these are some of the questions that could be going through the participants' minds as well. So let's now move on to the profit taking part itself. So you mentioned that you either measure a certain distance, or could it also be you measure a distance from that initial first breakout until the top of the box, right? And then from the top of the box to the next, the same amount will be your profit taking, right?
Yep.
Do you actually also consider any other kind of profit taking strategies like trailing stops or anything of that nature at all?
Yeah, trailing stops. That's also a possibility. Trailing stop, but I don't suggest trailing stop for this one, especially because this one is a very fragile stop. Again, I want to stress that out. And sometimes the breakdown candle, the first red candle would be long and then followed by successive long red candles, and then you cannot act right away. That's why I highly suggest to sell while it's still going up. Sell on strength. While others are still buying, you have to, lock in your profits right away and then move on to the next trade. So most of the time you're gonna get whipsaws definitely. You're gonna, because this is a volatile stock and the price tends to, go above the target price, but that's okay. Okay, move on to the next trade.
I see, I see. So what about situations where you have a certain target price based on the measurement, and then when it come close, it didn't touch, and then you are not sure whether you should get out or not. Should I follow my rules that I'm going to get out at the profit target, otherwise I don't get out? How do you handle that kind of very potentially psychologically very traumatized kind of situation?
That's a very good question, and I want to go again to the slides because
Sure.
it again happened on that same stock. So again, this is actually not the momentum target price, but there's a target price here. There's a strong resistance here, right?
Yes.
And if again, I bought here, okay, and then held the stock here, and then again, I'm still holding, and look at what happened here. Actually, there's a bearish candle here, right? Okay, so it actually did not. So if we will move this one, it actually did not really touch the resistance, the wick here, or
Yes.
it's just near, it fell short,
Mm.
but what I did actually is I sold 50% of my position here and then waited for this one if it's going to reach the target price or not. No, if it goes down here, I can sell the other tranche, the second tranche, the other 50% still at a profit,
Mm.
but lower profit. But that's a strategy that the viewers can also use. 50% or 50% near the resistance, and 50% if it hits or if it did not hit the resistance.
Now, let's move on a little bit more towards with regards to your position sizing and risk management part of it, just to dive a little bit deeper since you didn't really cover that much. So you mentioned earlier on, each position you might look at getting into is it a maximum of 25% of your entire capital base, or is it a maximum or minimum?
Minimum.
So there are occasions that you actually bet more than 25% of your capital base on one single entry.
Yes.
And what's the situation for that happening? What is it that makes you so optimistic about placing such a large bet on it? If you can recall, what were some of those situations?
Yeah, my strategy for those kind of setup is actually very simple. I think position size should be computed based on your mastery. Okay, mastery of the trade. If it's your bread and butter, and you have a lot of evidences that you are actually able to trade that, if it goes north or south, or if it consolidates, I think that should be the basis of position size. But that's just for me. But those rare occasions when I bet like 50% or even at 70-75%, for this setup actually, for consolidation at the highs. But for other setup like bounce plays or normal breakouts, I would just normally do 25% allocation.
Okay. So, with such a big allocation, that would mean that your equity curve could actually fluctuate pretty wildly, right, on a day-to-day basis.
Yeah, if you cannot act as fast as the setup requires, because this setup or this consolidation at the high setup is requiring you to act fast. So that's why me and my students, we call it Jedi reflexes. Okay, you need to the eye and the hand coordination should be fast, and that's it. You have to act fast for this kind of setup. But if you cannot, there's a saying that if you cannot stand the heat, stay out of the kitchen. Okay, if I don't suggest going more than 25% for the others who are still not familiar with this setup. But what I suggest is for them to undergo that process of gradually increasing the setup as their mastery or proficiency for this setup increases as well. Because they can, if for example if they will just focus on the business side of trading, which is just to grow the portfolio or improve their performance, and not look at trading as they need to trade every single day, because some of my students who are actually struggling in trading have this mindset that the more they trade, the more they will earn. It's like being in a lottery. The more entries you send, the more chances of winning, right? That's a wrong mindset for me. For me, you just have to be like a cheetah or a lion who's patiently looking for that good setup that will just pop out. Again, this setup is very simple, but it's not easy to trade because
Yeah, psychologically, it can be very difficult to see the kind of swings and the fear of missing out, as well as the greed that could come in when it reaches your target. So it's really not easy. So maybe what you are suggesting is that if, let's say, any trader who is generally not very familiar with this strategy, if they want to try it out, they should start with something like maybe 10% of their capital base on each trade.
Yeah, or even lower, or even lower. I would suggest start with virtual trading first. Of course, given the fact that you've already back tested the setup, and then you can start with virtual trading, and then start with very, very small allocation like 5% or 7% or even 10%, and then gradually increase from that. Okay.
I see. And is there any particular reason that you actually choose maximum 4 position with 25%? Instead of considering the possibility of, let's say, have up to 10 different positions in order to potentially diversify the kind of risk? Is that something that you have thought about before? Or is there any reason why you decided to just stick to a maximum of 4 positions?
That's a very good question.
Or is it because the such kind of opportunities just doesn't happen often, and that's the reason why, on average, you realize that at any point in time, the maximum position you can have is up to 4 because of a lack of opportunity?
Yeah, that one too actually. But the premise behind that 4 positions at a time actually started way back when I started trading, when I was I had very, very small capital. Okay, and then for retail traders, holding a lot of stocks like 10 at a time is won't actually do something or won't actually increase your portfolio, right? So
so it was the cost of trading at that point in time.
Yeah.
Okay.
Yeah.
Because
and then what I did was actually I just picked like a handful of ways on how I can earn. Okay, let's say there's this one setup which is consolidation at the highs, and then there's another one for bounce play, and then another one for sideways trading, and then I just focused on those, and then I just on a daily basis. Yeah, I'm a full-time trader, but I don't trade every day. I just trade when an opportunity comes, and then boom, I just do it. With all the rules and all. I just look for these types of scenarios, and not if. For example, the stock went up, but I don't know how to trade it, I won't touch it.
I see. So can you share a little bit about your daily routine or workflow? How is it like? Okay, so before that, how many multiple strategies are you trading or using at the same time? So this is just one strategy that you shared today that you are trading, but how many number of other strategies are you actually multiply looking at the same time to allocate your capital base to the different strategies?
So
is it like 3, 4, or 5 or something like that?
Yeah, 4 or 5. 4 or 5 at a time. Yeah, 4 or 5 at a 4 or 5 different setups at a time that I'm juggling. It depends, actually on what the market will provide us, because sometimes like for example the Philippine market right now is on a sideways and is about to break out, so there's we cannot find consolidation at the high setup in the previous weeks, but maybe in the next few weeks. But prior to like in the past I don't know 3 to 4 months, the play that I'm actually trading are actually just sideways trading, buy on support, sell on resistance, something like that. So it depends on what the market is giving me.
I see.
At the time, it's typically 4 to 5.
So which means on that front, that means the broad market condition, it's rather important as well before you even use this strategy as well, right? So what kind of broad market condition is ideal for such kind of strategy? Is it when the market is very bullish and such kind of strategy will work very well, or is it on a consolidation kind of market?
Okay, that's very good. So yeah, it can work for a I would say that this kind of this setup, consolidation at the highs, usually of course on outlier, they are outliers actually. For the market is consolidating right now, but
there are still outliers that is breaking out.
Yeah, they're breaking out. But yeah, typically this you can find these setups on a bullish market trend.
I see. So which means that you don't really care what kind of broad market condition. You just filter for the 70% and then just monitor those at the 70%. And even if, let's say, the broad market is generally bearish and you see such kind of breakout happening, will you still take it?
Yes.
You will still take it. Because to you, that's an outlier. It doesn't matter whether the broad market is going down or not.
Yep.
I see. And have you ever thought about such kind of breakouts or such kind of momentum move from the first breakout to the second breakout? Have you ever thought about who could be moving the price in that way? Is it due to like some kind of manipulation, or is it like the Wolf of Wall Street, the kind of potential movement that causes such things to happen?
Yeah, maybe, but it's I chose for it not to be part of my system. Maybe there's a manipulation or something, but for me it's just the chart.
I see. So you see yourself as, I'm just one of the fish in playing inside this game.
Yeah,
and regardless who move it, as long as there's an edge for me, I will just get it.
Yeah, I'm just a retail trader trying to make a living, something like that. And I don't care who moves the market or what's gonna happen. But here's the thing. The good thing about technical analysis is, it's showing us the price, right? And for me, everything is already included there. I mean, all the participants, the fundamentalists, the technicians, the speculators, the Facebook analysts, the Twitter analysts, it's already in the price chart. So that's the good thing about technical analysis for me. So, that's why I chose technical analysis.
I see. Yeah, I think you are totally right on that, because I've also started to realize, I was a very passionate fundamentalist in the past, but then I realized that fundamental is just one of the reasons that people buy and sell. Ultimately, there are all sorts of reasons due to emotions, due to psychology, due to whatever reasons. And the only thing that actually factors in all of this decision-making process is the chart and the price movement itself.
Correct.
I see. Fantastic. All right, so time is getting short. I have one last final question for you before we end off this session. You mentioned earlier on that for the first 5 years of your life trading the market, okay, you made a lot of mistakes, you blew up your accounts. Can you share 2 or 3 very specific mistakes, okay, that you made in the past and that you want traders who are learning to trade to really avoid making such specific mistakes that can really, really shorten their journey to becoming a proficient and profitable trader? So any 2 to 3 of these specific mistakes that come to your mind that you want to share as a conclusion to this presentation and Q&A?
Okay. Number 1 is position sizing. I was always going all in on very speculative stocks, and I don't advise that you guys do that, because that's the faster way to burn your trading accounts. And number 2, I was too arrogant to accept the fact that because in trading you will commit a lot of mistakes as well. And you will whenever you're losing, it's you will look at yourself and then sometimes blame yourself. I was denying that because I was too arrogant. Hey, I'm a very intelligent person. The market is wrong, right? Not me. PSE is manipulated, or the market is manipulated, not me. I'm a very intelligent person. So I was too arrogant to accept the fact that I could be wrong. And by the time that I don't suggest that you guys do that as well. The market will really humble you, okay, in your journey. That's one thing for sure. And that's the time that things will change. Rewards rewards and results will follow. Okay, learn how to humble yourself.
I see. Fantastic, Christian. This has been a fruitful session for me, and I'm sure the summit participants benefited greatly from your sharing as well. So thank you so much again for participating in this summit.
Thank you so much, Philip, and to the team, to your team, and to the viewers. Thank you so much for giving me your time.
Fantastic. Now, for those of you watching this summit video right now, if you would like to keep in touch with Christian and learn